Hi everyone and welcome to Property Insight. My name is Neil Harding.
My name is Mark Ashworth.
On today's video we're going to be talking about making tax digital, MTD. You may have heard about this before. There are new rules coming in that will be affecting a lot of landlords that own property in their own name, and ultimately if you have rental income of £20,000 or more, then watch all the way to the end because this is going to impact you.
So, making tax digital, the government wanting us to regularly report on our position, income due. Looks like we're going to be needing to do this on a quarterly basis in the fullness of time, but there's some detail around it. It's not going to come in straight away. It's going to take a couple of years to come into full effect. So initially those people that are affected are those who have got £50,000 or more of rental income. Important not to say it's not profit, it's rental income. So if your rent roll is £50,000 or more, we're going to need to be reporting on a quarterly basis, electronically, more importantly. So you're going to need to find a digital solution rather than just writing it down in a notepad.
Yeah, that's right. It'll be quite a change for quite a few people. So for self-employed people, it'll be relevant as well, but particularly for landlords, of course, which is what we're talking about. Whereas at the moment, people will do an annual income tax return. It's a one-time, once-a-year hit. You know, there'll probably be some people watching that have an accountant which takes care of all of this for them. Maybe there'll be some people do their own tax returns. Sometimes people have software already, but there are still people that have things on, you know, notepads and ledgers and boxes of receipts. That is still something that some people do. So the making tax digital part of it is, as you say, electronic, and you will need to use software that has been approved and accepted and is compatible as far as HMRC are concerned for the submission.
So this starts from the 6th of April, so the new financial year 2026. So for this year you're going to be okay, but from 2026 you're going to need to start reporting. There's a number of links down in the description below which show you which softwares are available and that you can use. One that I use personally, and we're not being sponsored on the video by Hammock, but I would strongly recommend Hammock as a solution for you to report your financial details through to HMRC and to get that reporting done. It's basically a customized zero product, if you will, for landlords, and you can use it on single lets, you can use it on HMOs, and it's a really fantastic way. It automatically tracks all of your transactions that come through via open banking. So you give your bank account details, which it will then pull in the data from that bank account, and it will be able to, in some ways, automatically track regular payments, and any payments that aren't regular, you can automatically assign to have the appropriate code, whether it might be for a gas safety certificate or whether it's for some painting and decorating or to replace an item, etc. Go have a look at it. It's a great bit of software, really easy to use. It's going to be full effect 2028, which means, is it 20,000?
Yeah, we can. I've got the sort of the timeline and the amounts here in the years. So from the 6th of April 2026, so that's for the income tax year ended 5th of April 2027.
Yeah.
Landlords with annual income of £50,000 or more, and that can also be from self-employment or property rental income, in the tax year 24-25 must comply. So it's almost like you look back for the previous year, and then if that's what it was, then you've got to comply from the 26-27 tax year. Okay. From the 6th of April 2027, this is extended to landlords earning £30,000 or more for the previous tax year. And then from the 6th of April 2028, so then that will be for the income tax year ended 5th of April 2029, the new rules apply to landlords with income of £20,000 or more per year in the previous tax year. So by that time, I think if you've got, say, 2 rental properties that you own in your own name, you pretty much everyone in the country is going to be covered by the rules of making tax digital.
And it's important to mention that there are some landlords out there that do their own tax return because they have properties are supplementary to their income, and so they're doing their own tax return. So it's really important to try to understand exactly how you'll be affected and when you'll be affected. And if you're not sure, If you don't have a tax accountant, it's probably a good idea to either get one or have a conversation with one prior to, just to know exactly what the position is. I would say that those of you that are earning more than £50,000 income from property, then you probably should and probably will already have your own accountant anyway, and they would be communicating this to you. They should be communicating this to you now, really.
Yeah, and if they're not, you've got to wonder why. If you just watch this video, why aren't they raising this with you?
And just to clarify, you said earlier that the 50,000 or the 20,000, depending on how it affects you, includes earned income as well.
If you're self-employed and therefore do an income tax return because you're not salaried on a PAYE, then yes, it includes that as well.
So this is not just for landlords, this is for anybody that's self-employed effectively.
Yeah. What we do know, when we go to Making Tax Digital, the quarterly returns will be done on a cumulative basis. So Q1, you put your numbers in, it'll be Q1 numbers. When you get to the Q2 submission, you'll be putting in 6 months worth of numbers. So anything that you were out by slightly on Q1 effectively would be all rolled up into a correction for your Q2 submission that would represent 6 months cumulative info.
And is that the same for Q3 and Q4 then?
Yeah, and so on until you get to Q4, and then that's your full year submission. And there'll be more software as well that will be announced on the HMRC website, I'm sure, as this becomes on, that you can use. Some of it's free, by the way, not all of it is pay for use.
So, Neil, as an accountant, what's the reason for it, do you think?
Oh, that sounds like a conspiracy theory.
Let's rephrase that. So, in your opinion,
Yeah.
in your professional opinion,
Yeah.
what do you think your best guess is at the reason for the changes?
Well,
Other than that most things are going digital, obviously.
Well, if you're HMRC, you'd probably say at the moment that the reason we're asking for this is because it brings us into the 21st century, and it means that we get better data. We can forecast the Treasury's coffers more accurately. If you're not part of the HMRC soapbox and you're a landlord, you're probably thinking, well, this is actually one step closer towards paying your income tax bill quarterly.
Surely from HMRC's point of view, from a cash flow perspective, I mean, if you run a business, any kind of business, to be paid at the end of each year would just seem absolutely crazy, wouldn't it? You'd think that HMRC do want regular
I think it's
payment.
a step towards a cash flow advantage. It would not surprise me at all if in 5 years plus time, then by then it'll probably be a new term of government, where it will be, it might be a new government as well. It's not going to be that much of a leap for them to say, well, we've got all this information, why don't we actually get the payment? So you submit your quarterly draft tax return, and then based on that, we know what the tax is going to be, so pay it then. Landlords will be perhaps concerned about is, well, accountants are going to charge more for this, that it's going to be more work. So accountants will be trying to figure out now, what do they actually bill for it. I was speaking to an accountant at a networking event a month or two ago, and they were trying to figure out, well, what is a fair amount to actually bill for this now? The
most important thing that you need to consider now is how you manage your electronic bookkeeping. So your bookkeeping needs to change from manual, if you're doing manual, to electronic, and it needs to be done regularly. You need to do it on a monthly basis. You can do it yourself, or you can hire a bookkeeper. The bookkeeper really should be providing a full set of finished books to provide to your accountant. And if you're not doing that, then that's possibly the reason why you're paying a lot for your accountant, because they're having to do bookkeeping tasks for you and they're charging you accountancy rates. So obviously have a look into that as well. And if you've got any questions on that, pop a comment or a question in below, and Neil, I'm sure will be delighted to answer that.
Thanks very much for watching. I hope that's been helpful and insightful. Please do comment, like and subscribe. We do reply to the comments and we look forward to reading them from you all. And we look forward to seeing you next time.